Agency in Motion continuing education series brought to you by Millionaire Mindset Life. This is a series that's specifically designed for agents, producers, advisors, as well as agency builders in the financial services industry. And today's episode is all about mastering follow-up to unlock your true potential and success in this industry. Why is it that follow-up is such an essential key ingredient for success in this industry? Well, because power is in the follow-up. Let's examine some ways that power is in the follow-up. Building trust and credibility. Follow-up demonstrates a commitment to client satisfaction and shows your value to their needs and goals. Consistent follow-up helps to build trust and credibility, which are crucial in the financial services industry where clients rely on advisors and agents for their financial well-being. Also, increasing client retention. This is very important. Effective follow-up contributes to higher client retention rates by staying at the top of mind and reinforcing the relationship with clients over time. Retaining existing clients is often more cost-effective than acquiring new ones, making follow-up an extremely valuable strategy for long-term success. Also, in identifying opportunities, follow-up enables advisors, coaches, and agents to uncover new opportunities for providing value to their clients. By maintaining regular communication, advisors can better understand their clients' changing needs, their financial goals, and their life circumstances, allowing them to offer tailor-fitted solutions and recommendations. Also, the differentiation and competitive advantage is in the follow-up. In a competitive industry like the one that we're in, financial services, excellent follow-up can be a key differentiator. Advisors, agents, and coaches who consistently follow up with clients stand out from the competition and are more likely to be remembered and recommended by satisfied clients. Let's switch gears now and talk about follow-up for financial success. First of all, client conversion rate. Studies have shown that consistent follow-up can significantly increase client conversion rates. According to the research by the Harvard Business Review, companies that follow up within the leads within an hour are 7 times more likely to have meaningful conversations with decision makers compared to those who wait longer. Also, revenue growth. A study by the Sales Executive Council found that companies with a structured follow-up process achieve 21% more revenue growth compared to those without one. That highlights the direct correlation between the effective follow-up strategies and financial performance. Follow-up is also great to build client satisfaction and loyalty. Research conducted by Bain & Company revealed that increasing customer retention rates by just 5% can lead to a 25 to 95% increase in profits. Follow-up plays a crucial role in maintaining client satisfaction as well as loyalty, ultimately contributing to long-term financial success. Referral generation, something that we always want and need. A report by the Wharton School of Business found that referred customers have a 16% higher lifetime value than non-referred customers. Effective follow-up not only enhances the client experience, but also increases the likelihood of receiving referrals, which can significantly impact revenue generation. And then identifying cross-selling opportunities. Consistent follow-up provides opportunities to uncover additional financial needs or additional goals the client may have. By maintaining open communication channels, advisors, agents, and coaches can identify cross-selling opportunities for products or services that align with the client's ever-evolving needs, thereby increasing value and increasing your revenue. Now let's talk about some key differences between low and high earners. One of the main things is consistency. High earners consistently follow up with clients and prospects, whereas low earners may do so, but in an inconsistent or sporadic way with their follow-up efforts. High earners understand the importance of staying on the top of mind and nurturing relationships over time through regular communication. Promptness. High earners prioritize prompt follow-up, responding to client inquiries or requests in a timely manner. They understand that delayed responses can lead to missed opportunities and signal a lack of commitment to the client needs, whereas low earners may be slower to respond or follow up. There's also an added benefit of personalization. High earners tailor their follow-up approach to each client's preferences and communication style. They take time to understand the client's individual needs, interests, and concerns and then they customize their follow-up messages accordingly. In contrast, low earners may adopt a one-size-fits-all approach to follow-up, lacking personalization and relevance. And then there's value-added communication. High earners go beyond basic follow-up messages by providing value-added communication that demonstrates expertise and thought leadership. They share relevant industry insights, offer proactive advice, and provide solutions to their clients' ever-changing financial challenges. Low earners, on the other hand, may focus solely on transactional follow-up without adding any substantial value to the conversation. And then understanding your client needs. High earners use follow-up as an opportunity to gain deeper insight into clients' goals, preferences, and concerns. Through ongoing communication, they actively listen to clients' feedback, identify the ever-evolving needs that we've talked about, and they tailor the recommendations accordingly, fostering a deeper understanding of client needs and preferences. And they're able to provide personalized solutions. High earners, they leverage follow-up to provide personalized solutions that address the client's specific financial goals and challenges. By maintaining regular communication, they can often offer tailored advice, recommend relevant products or services, and adapt their approach based on the client's changing circumstances, leading to a more effective solutions-based conversation and approach and a higher client satisfaction. And then finally, higher earners close more deals. Higher earners recognize that effective follow-up is the absolute key to closing more deals and achieving higher sales targets. By staying proactive and persistent in the follow-up efforts, they increase the likelihood of converting leads into clients, securing repeat business, and generating referrals. Their consistent follow-up helps them stay at the top of the mind of all of their prospects and allows them to build credibility and ultimately close more deals. So what's some actionable insights for effective follow-up? Well, first of all, you have to define your follow-up goals. Partners should start by setting clear objectives for the follow-up efforts, such as increasing client retention, generating referrals, or closing more deals. Defining specific goals can help you prioritize the follow-up activities and actually measure what's right or what's not right, aka the success of the follow-up. Segmentation and personalization. Encourage your partners and encourage yourself to segment their client base based on demographics, preferences, or purchase history. Tailoring follow-up messages and communication channels to each segment enhances personalization and increases engagement. And we've got to create a follow-up schedule. Develop a structured follow-up schedule outlining when you or your partners should follow up with clients or prospects. This could include follow-up timelines for different types of interactions, whether it be post-meeting, quarterly check-ins, or whatever it might be, ensuring consistency and accountability. And then you also want to get in the habit of utilizing multiple communication challenges. Recommending, using a mix of communication channels such as email, phone call, social media, and in-person meetings or online meetings to reach clients and prospects. Diversifying communication channels increases the likelihood of engagement and accommodates varying clients' preferences. You want to reach your clients in their preferred method of communication and allow them to respond back in their preferred method of communication. You also need to implement a CRM software. When you leverage a customer relationship management system and software to streamline follow-up processes, track interactions, and organize client information, things are going to be more organized and things aren't going to fall through the cracks. CRM platforms provide valuable insights into client behavior and preferences, enabling more effective and personalized and tailored follow-up strategies. Automate wherever you can. Automate the follow-up processes. You can use automation tools within CRM software to schedule follow-up emails, reminders, tasks, etc. Automation streamlines follow-up processes, reduces the manual effort, and ensures timely communication with clients and prospects. Automate as much of your business as you can so the time that you spend will be more personalized. And then also figure out what's working. Track and analyze the data. You've got to regularly review and analyze your data related to your follow-up activities, such as open rates, response rates, and conversion rates. This allows you and your other partners to identify trends, optimize follow-up strategies, and measure the effectiveness of the efforts. And then finally, everybody's favorite, right? Establish accountability measures. Implement accountability measures such as performance metrics or follow-up targets to ensure partners remain committed to their follow-up practices. Regularly review progress and provide feedback either to yourself or to your partners. It will reinforce the importance of follow-up and encourage consistency. Agency and motion, building, operating, and managing agencies in the new digital environment.